Record. Hello, welcome to our presentation. This is the final project for 3565, and we decided to analyze stocks. I'm Mason Stevens, and so for background on why did we decide to do this? Well, the answer is simple. We are interested in how numerical computation can leverage vast amount of data to forecast economic outcomes and enhance financial decision-making. This interest is driven by the potential to demystify complex market dynamics and make informed predictions that can benefit individual investors and large financial institutions alike. The modern financial market is a complex system where numerous factors interact in dynamic ways. Price fluctuations can be influenced by various elements, including economic indicators, company performance, political stability, and more recently, public sentiment expressed through digital media. Understanding these influences requires sophisticated computational techniques that can analyze large data sets to find patterns and predict future movements. We researched numerous studies that have explored the application of machine learning and data analysis in financial forecasting. For instance, research on predictive models like ARIMA, ARIMA, for stock forecasting and volume analysis using natural language processing to gauge market sentiment for news headlines has been pivotal. This project builds upon such foundational studies but introduces an integrated approach by combining different methodologies to predict stock prices more accurately. The stocks. And this data set used in the project also comes from Alpha Vantage, which provides comprehensive financial data APIs that offer real-time and historical data on stock prices, trading volumes, and economic indicators. The data is observational, collected over several years, providing a rich basis for time series analysis and trend forecasting. This data was initially collected by financial analysis and researchers to monitor market conditions and support trading decisions. The question that we hope to answer is, can we predict future stock price movements based on historical data and economic indicators? How do various economic events affect stock prices and market volatility? And what are the underlying patterns in stock price movements, and how can these be used to predict future trends of the stocks?
Hi, my name is Beta. Before we dive into the complex analysis and methods that we use in our project, I'd like to personally mention that we used EDA, or exploratory data analysis, which was essential to our understanding of the data structures, quality, and relationship between the variables using the API. So the EDA involved data cleaning, which was handling missing values by imputation or removal, depending on the impact of the data set. So essentially identifying the correct errors in the data entry or processing, i.e. like misaligned columns or incorrect scaling. The second was visualization, creating plots such as time series graphs, histograms, box plots to visualize aspects of the data distribution, outliers, trends, and cyclities. This step helped us initially understand the stock price movements and their correlation with the other variables. And then lastly, statistical summaries, generating descriptive statistics to capture central tendencies, disparitions, and the shape of the data distributed across multiple stocks and indicators. So, Pandas data frames are utilized extensively in our project to store and manipulate data, acting effectively as a matrix. Each data frame holds data in a matrix-like format, with rows representing individual entries and columns representing variables like open, high, low, and close prices. Operations such as calculating moving averages involving rolling matrix operations, where communication across several element mimics that matrix manipulation, emphasizing the underlying linear algebraic operations. The matrix perspective is crucial when we scale features from machine learning models, where transformations are applied across columns to standardize data, directly reflecting matrix manipulation addition to the data processing phase. Our primarily statistical method was the gradient boosting regressor. Is part of an enable of a decision tree, which each successive tree learns from the errors of the previous one, highlighting and iterating important arcane recursive function applications in numerical methods. The aggressive use of robust mechanisms to handle nonlinear relationships, which is crucial given the complex nature of the stock price movements. Alongside the linear regression component within the framework helps establish a direct relationship between the stock prices and their lagging indicators like moving averages and volume. Linear regression, like the mathematical formula was y equals beta 0 plus beta 1 x plus dot dot, being the equation b beta n x n, where beta values are coefficients illustrated how regression models forecast future prices. For future stock price predictions, cubic Hermite spline interpolation is employed, using not only the values, but also the derivatives at each data point to create a smooth curve. This method is particularly adept to handling the nuance of financial time series data, which require continuous and smoothness in prediction. The mathematical representation involves Hermite's basis function, ensuring that both functions and its derivative are continuous across the interpolation interval, thereby providing a realistic and continuous prediction of the stock prices. The effectiveness of these methods is quantified through mean squared error, or MSE, and the R-squared statistics, providing a measure of model accuracy and the variance explained by the model, respectively. A low MSE in conjunction with a R-squared value across different stocks like Apple, Microsoft, and NVDA suggests that the models not only fit the historical data well, but also robustly predict future trends. These metrics are vital in validating the predictive power of our models, directly in answering our questions regarding the predictability of stocks movements using historical data and engineering features. The combination of advanced statistical techniques and machine learning algorithms allow us to address complex research questions effectively. For instance, the application of the gradient boosting and Hermite spline interpolation explores whether stock prices can be predicted with high accuracy using past trends and derivative information. Additionally, the use of feature scaling and data processing methods ensure that our data input is well suited for machine learning application, which is crucial for achieving reliable predictions in financial market characterized by noise and validity. In conclusion, the detailed application of these methods provided a comprehensive understanding of the factors driving stocks prices and offers a reliable forecast mechanism. This aligns with our project's goal for using numerical computation to extract meaningful insights from complex financial data sets, thereby supporting the informed decision-making of financial investments. So to show, we'll represent the graphs that we got from our models. So as you can see here, we have stock price trends predictions, as you can see on the Apple close price, which the close price represents the trade that was sold at the end of the day. So as you can see, the volume representing the people who owned it and sold it at that day during the year. So the plotted historical stock prices alongside predicted future value we're using cubic Hermite spline interpolation, highlighting the model's ability to capture the extra trends. So as you can see here, Apple has been going through a spike, but rapidly going down in price. So logically speaking, you would recommend your owners to like sell their stock, as clearly Apple is losing and you don't want to lose your clients' money. Moving on to the next two companies, you can see here with Microsoft, it goes from a slowly trend starting from 2000, but as you can clearly see, it starts to rise again. Notice how in the volume trend, a lot of people don't have it. So it's worth a lot of stock to buy if the client wishes to grow their money and like rise to the top. Moving on to the next company, we have NVDA. And as you can see, it also has spikes, but clearly it's like rising, but you can see slightly that it's going down here. This is possibly from our predictions, we assume that it's going to fall from its spike. So you would recommend our owners and clients to sell their stocks in this situation. As you can see, a lot of clients joined, but now falling short in 2024 as the years continue.
Now, you may be asking, what now? What are we supposed to do with this information? Well, in conclusion, what we have drawn from doing this project is that we utilize our techniques to analyze a vast amount of stock market data, focusing on stocks like NVIDIA, Microsoft, and Apple. Our analysis uncovered insights into market trends and behaviors. The graphs we generated shows fluctuations in stock prices and trading volumes, indicating growth for NVIDIA and Microsoft in recent years, while Apple exhibited notable volatility. This volatility could be influenced by a variety of factors, such as market trends and technological advancements. A key accomplishment of our project was successfully implementing gradient boosting regressors, which proved to be highly effective in predicting stock prices. These models, trained on data, demonstrated a predictive capability with R-squared values approaching 1. This underscores the potential of machine learning models to grasp patterns and trends within markets. Moreover, employing cubic Hermite spline interpolation to smooth out price trends based on data emerged as a useful predictive technique. This approach allowed us to project the direction of stock prices beyond the existing data range, providing insights for investors seeking to anticipate market shifts. Now, looking ahead, there are avenues for expanding this research, including an array of factors. Factors similar to indicators of company financial reports and global events that could improve the accuracy of these models. Setting up a system for real-time data analysis could offer insights for making decisions based on market conditions, and strengthening the sentiment analysis aspect, which was not fully incorporated into the project due to data constraints, could enhance the depth of the analysis. Delving into machine learning models such as deep learning and neural networks might reveal deeper insights and lead to more precise predictions. Furthermore, exploring methods that could blend finance theories with machine learning could potentially enrich our understanding of market behaviors, especially if those models incorporate finance metrics to address the irrational behaviors often seen in market participants. Overall, this project underscored the role of numerical techniques to play in analyzing intricate real-world data sets and emphasized the meticulous approach needed in managing, processing, and interpreting such data. The fusion of knowledge with the application offered a valuable learning journey and paved the way for future exploration and utilization of numerical computation in finance and other fields. This initiative has established the groundwork for academic and practical financial analysis and predictive modeling behaviors. Thank you. I hope these stocks make you rich.